You know, when you think about Apple, it's easy to get caught up in the latest iPhone launch or the daily stock price. But today, we're going to go a little deeper. We're going to ask a really fundamental question. Is the actual business of Apple getting stronger? We'll dig into the numbers that really matter: revenue, profitability, cash flow, to give you a clear picture of the company's financial health. Okay, let's dive in.
So, to understand where Apple is today, you have to appreciate the sheer scale of its past. Take a look at this number. That is the staggering return an investor would have seen since Apple's IPO 44 years ago. It is, without a doubt, one of the greatest wealth creation stories in history. But that's the stock story. We're here to understand the business behind that number. So here's our game plan for today. We'll start with Apple's incredible growth story. Then we'll map out its journey to trillions, connecting the dots between innovation and profit. We'll also look at the Buffett endorsement to understand its cash machine. And finally, we'll explore how Apple is creating value beyond the numbers and building a greener, more resilient business for the future.
All right, first up, an incredible growth story. Let's set the stage. The date is December 12th, 1980. Apple goes public at just $22 a share. Back then, few people could have possibly imagined that this was the beginning of a journey that would redefine not just technology, but the very idea of how big a company could get.
Remember that crazy 249,900% number? Well, here's what that actually means. A simple $1,000 investment, if you just held on, would have blossomed into nearly $2.5 million today. Now, that kind of long-term growth doesn't just happen by accident. It's fueled by a business that consistently, year after year, finds new ways to grow. So, the next big question is, how did they do it? It wasn't magic, that's for sure. Apple's massive financial growth is a direct result of its history of world-changing innovation. You can literally tie every major milestone in its valuation to a product that completely changed the game.
And this timeline tells the story perfectly. The IPO laid the groundwork, and the Macintosh in '84 showed their early ambition. But just look at that incredible acceleration after 2007. The iPhone created an absolute revenue juggernaut, and it's still their biggest segment. But the real story for investors today is diversification. The iPad, the Mac, and especially that high-margin services division, we're talking App Store, iCloud, Apple Music, they are all massive businesses now, which makes the company way less dependent on just one product.
This right here illustrates the engine behind all that growth. It's not just about one revolutionary idea. It's about a relentless cycle of improvement that lets them command premium prices and drives phenomenal profitability. You see, for every dollar of sales, Apple gets to keep a big chunk as profit. We call that margin. And Apple's ability to protect its high margins is a huge sign of its business strength.
So historical performance is one thing, but to really understand if a business is strong today, you have to look at the underlying financials. So what do the people famous for buying great businesses, not just trading stocks, see when they look at Apple's numbers? And that brings us to Warren Buffett. When one of the most disciplined, value-focused investors in the world makes a company his single largest holding, that's a powerful signal. He isn't looking at hype, he's looking at the financial engine, the core profitability, and the cash generation of the business.
This quote really gets to the core of his philosophy. He buys a piece of a business so he can share in its success. And for Apple, that success is measured by its incredible ability to turn revenue into cold, hard cash. Buffett loves businesses that generate enormous amounts of what's called free cash flow, which is really just the cash left over after running the business and investing in its future.
And here's the proof of that conviction. Look at this. Based on data from late 2020, Berkshire owned over 900 million shares. That was 5.4% of the entire company, worth over $120 billion at the time. A bet this large is a statement. It's a statement on Apple's financial fortress, its giant pile of cash, its manageable debt, and its strategy of returning all that free cash to shareholders through huge stock buybacks and a dividend that keeps on growing. But a strong business in the 21st century has to think beyond just today's profits. Smart investors are now looking at how companies manage long-term risks and build lasting brand value. And this brings us to another pillar of Apple's strength, its approach to sustainability.
Now, this slide is really interesting because of the financial story it tells. On the left, you see massive business growth. Revenue is up 64%. On the right, a huge reduction in emissions, down 55%. This shows incredible operational efficiency. But more importantly, by getting ahead of environmental regulations, Apple reduces future risks, like potential carbon taxes, which is something smart investors are definitely paying attention to.
Let's be clear, this is not just about public relations. Apple is integrating its environmental strategy deep into its core business model. And this builds brand loyalty, it drives efficiency, and it creates a more resilient and financially sound company for the long haul. So, to tackle a problem, you first have to measure it. This chart shows that manufacturing is the biggest piece of the carbon puzzle. So by focusing its efforts right there, Apple isn't just cleaning up its act, it's also making its entire supply chain more efficient and more robust. And here's the plan. What's really smart is that each of these points also has a financial benefit. Shifting to ocean freight, that cuts costs. Designing products that last longer, that increases customer loyalty. And investing in recycling, that helps secure the supply of critical materials for the future. It's a win-win.
This is so much more than just a recycling lab. You should think of it as a strategic asset. By inventing new ways to recover valuable materials like rare earth metals from old iPhones, Apple reduces how much it has to rely on mining in volatile commodity markets. This is a powerful way to control future costs and de-risk its supply chain.
So, here's the crucial point. Durability is a financial strategy. A product that holds its value for years and years enhances brand loyalty, it creates a strong secondary market, and it keeps customers inside the Apple ecosystem for their next purchase. It's a virtuous cycle that supports long-term revenue. So back to our original question. Is Apple's business getting stronger? The financials show a company with incredible strengths, best-in-class profitability, a growing high-margin services business, and a machine that generates enormous amounts of free cash flow. Of course, no business is without risk. There's intense competition, exposure to global supply chain problems, and an evolving regulatory environment, especially around the App Store. Those are all critical factors to watch. By looking at the full picture, from its revenue streams and profitability to its strategic use of cash and risk management, we get a much clearer view of a company's fundamental strength.